Marcus put $12,000 into SpaceX stock because he read that 911 million shares were unlocking. Jordan read the same headline and decided to wait not from fear, but from understanding what the number meant. Marcus is watching his position move against him and wondering whether the real danger has already passed him. Jordan is watching the same price and thinking about a completely different date, June 2027. The difference between Marcus and Jordan is not confidence or risk tolerance. It is one mechanism they both read about. That mechanism is the lockup expiration, and understanding it will change how you see every company that goes public. Let's run the real math on what unlocked on August 6th, what did not, and what is still coming. Start with what a lockup is, because almost every confusing thing that follows comes from this one definition. When a company lists on a public exchange, it does not release all of its shares into the open market immediately. Founders hold shares, employees hold compensation shares, and early investors hold shares from pre-listing rounds. Those holders sign a contract preventing them from selling for a set period after listing that is the lockup. Here is the part that gets lost. A lockup expiration does not sell anything and does not move a single share. It changes one thing only, and that one thing is permission from legally cannot sell to legally may now sell. Before the expiry, an early employee is legally prevented from selling, regardless of the price or their situation. After the expiry, that same employee is legally permitted to sell. Whether they actually do is entirely separate. That decision depends on their tax situation, their view of the company, their mortgage, and 100 other things. When Marcus read that 911 million shares unlocked, the right translation is not 911 million were sold. It is not even 911 million shares are for sale. It is 911 million changed from cannot to may. That distinction sounds technical until you notice that essentially all media coverage collapsed it completely. The panic framing assumed permission would convert into selling at nearly a 1-to-1 rate. It does not work that way. Now let's look at who actually holds these shares, because the holder's identity tells you what the headline cannot. A software engineer who joined 8 years ago and took stock instead of higher salary is not a trader at all. That position may represent most of what they own, and some will sell a slice to buy a house or pay a bill. Many will hold because they believe in what they built, or because selling all at once creates a tax bill to spread. Early institutional investors behave differently. A fund sitting on an enormous gain must serve its own investors. Rushing a large sale moves the price against you, and sophisticated institutional holders understand this very well. The honest answer to how much of that 911 million will sell is nobody knows, not even the holders. Research shows an average abnormal return of negative 1.5% around lockup expirations across stocks. Not a collapse, a small, measurable drag plus a large spike in volume as shares change hands between participants. Lockup dates are not secret. They are printed in listing documents months in advance, and every institution knows them. A known future event does not ambush a market. It gets priced in gradually as the date approaches over preceding weeks. By the time the date arrives, much of the price adjustment has already happened in the sessions leading up to it. Now here is where the SpaceX coverage specifically went wrong in 2 directions, and almost nobody caught either. On Wednesday, August 5th, the stock fell almost 14% and closed at its all-time low since the listing date. On August 6th, the shares unlocked. The stock dipped briefly and closed up 6.1% on the session. That 6% gain produced every relief headline supply arrived. Stock rose, danger declared past. Therefore, the reasoning went the supply did not matter, but look at what that reasoning is actually comparing. It measures a 6% gain from a floor set the prior day by a 14% decline, not from any strength at all. The stock did not rise from a position of strength that bounced off an all-time low after its second worst session. Measured from the June peak of roughly $225, the close before the unlock was already down more than 50%. A 6% recovery in those numbers is not proof supply is irrelevant. It is what stocks do after 14%. And there is an uncomfortable possibility that almost nobody in the financial press stated clearly or plainly. Some of that 14% Wednesday drop may not have been about earnings. It may have been the lockup itself. The market may have done on Wednesday what everyone was waiting to see. Thursday priced the supply in 1 day early. Known dates get priced in early, which means judging a lockup by what happens on its day misses most of the story. Now here is the number that changes everything, the one that got almost no coverage in any major financial outlet. Before August 6th, SpaceX had roughly 638 million shares in its float, what the public can actually trade. After the unlock, that rose to about 1.5 billion shares, more than doubled. As every headline said, that framing is accurate and also one of the most misleading true sentences written about this company this year. Before the unlock, the float was 4.9% of total shares outstanding. After August 6th, it was 11.8%. Doubling a very small number gives a slightly less small number. 88.2% of SpaceX cannot trade even now. The total share count is roughly 13 billion. 1.5 billion are now tradable after the August unlock. Every SpaceX move the rise, the 52% decline, the 14% drop happened inside a very thin sliver. At the peak, roughly 1/20th of SpaceX was setting the price for the other 19/20ths of the company. That is why the volatility has been extreme. It is not a mystery or a scandal. It is arithmetic about scarcity. When a small number of shares are available and demand is large, small changes in demand produce large price changes. Scarcity amplifies moves in both directions. It made the early rise steeper and the decline steeper too overall. Now let's look at the actual unlock schedule because this is the information Jordan had that Marcus never found. The August 6th unlock was not a single gate. It was the first tranche of a staggered, documented schedule. Those 911 million shares were about 20% of one restricted pool, totaling roughly 4.5 billion shares. 20% of that pool went out on August 6th, meaning 3.59 billion from that pool remain locked today. They do not arrive at once. They release in tranches tied to fixed milestones and earnings windows through December. There was also a conditional early release built into the agreement that never triggered because the stock fell. If the stock had traded 30% above listing on 5 of any 10 days, an extra 10% would have freed early. That threshold was above roughly $175. The stock spent the entire window going the wrong way. The early release was designed to let more supply out. When the stock was strong, it was weak, so supply stayed locked. And then there is the block that makes everything else look small, the one the press almost never mentioned. 6.4 billion shares are held under a separate arrangement running a full year from the listing date. Those shares unlock on June 12th of 2027. There is no early release provision attached to them. 6.4 billion shares, 7 times the August 6th tranche that produced a week of breathless coverage. It is 4 times the total float of SpaceX as it exists today, after the unlock everyone called the moment of truth. If every August 6th share was dumped at once, it would still be 1/7 of what comes in 2027. That is why both framings of last week were wrong, pointing at a date too small to produce a crash either way. The relief declaration was declaring victory over the first fixture of a season that runs all the way into next summer. Should Marcus buy SpaceX before the June 2027 unlock? And what should Jordan actually be watching for now? That question cannot be answered from a lockup calendar alone. Supply is one input and demand is the other entirely. Demand over 10 months depends on revenue, capital spending, index inclusion, interest rates, and actual business performance. None of that is knowable from a schedule, and the base rate across companies is only negative 1.5%. What can be stated clearly is that the analysis most investors received last week was measuring the wrong thing. It treated a scheduled, publicly documented staggered release as a single event with a single verdict and single day. It declared the question settled on the evidence of one trading session that began at an all-time low the day before. The useful lesson here is not about SpaceX, it is about the mechanism, and the mechanism repeats with every listing. Every time a large company lists the same structure appears small float, extreme volatility, staggered releases, and a first lockup date that attracts enormous coverage, while the larger releases behind it attract almost none at all. When you see the next one, and there will be a next one, 3 questions will tell you more than any headline. What percentage of the company can actually trade right now? And what is the full unlock schedule beyond just the next date? Share counts are fixed dollar value shift by which day someone multiplied, a $27 billion difference. Jordan understood those three questions before August 6th and is now asking them about June 2027. Marcus is still watching price action and waiting for the financial media to tell him when the danger is finally over. The media declared danger over on August 7th, measuring an entire season by just its first fixture. So before you buy any newly listed stock, ask yourself one question that almost nobody in the press asked last week. What percentage of this company can actually trade right now? And when does the rest become available to sell? Because that answer, not the price, not the analyst target, not the lockup headline, is the only complete picture of supply.